ahead and start the,
Let's
there
do
we
it.
go. Our friend at Zoom. All right, everybody. Well, welcome. Thank you so much for joining us. We're really excited about today's webinar, which is entitled Ethics of Profitability, Accounting in Independent Practice. We are so grateful to Julie Harris for joining us today. She is the founder and CEO of GreenOak Accounting. She is the author of the book Profit First for Therapists, and she's the host of a very informative podcast, Therapy for Your Money. And just as a quick plug for their practice website, they've got a lot of great resources and tools on their website, including for things for those if you're just getting started, as well as those that are trying to level up their practice in terms of the financial aspects of their practice. It's a lot of great resources on their website. And also, before I pitch it to Julie, I just want to make a quick plug for an event that the Section for Professional Practice will have on June 2nd at 12 p.m. Eastern. This is an event that we do every 4 to 6 months or so called Hang Your Shingle. And it is an event, a webinar slash discussion space that is designed for folks that are thinking about going into private practice or folks that are maybe in private practice but are looking to build it or expand it. And this is a great opportunity to kind of get together, learn some from folks that have already been in private practice for a while, but also to sort of share ideas with other people that are just getting started as well. So I'm going to put a link to the registration form in the chat toward the end of today's webinar. But without further ado, I'm going to pitch it to Julie. Thanks again, Julie.
Thank you. And I'm going to share my screen. If you can just help me make sure that you can see it just fine. There you go. See the whole thing? Okay, perfect. All right. Thank you so much. Without further ado, we're talking today about profit first for therapists. We are specifically focusing on the ethics of profitability. So I'm Julie Harris. You already got my intro, so I'm going to skip over this. But I'm an accountant first and foremost. I'm a lover of numbers. I like to joke that my superpower is seeing the story within the numbers. So when I see a financial report, I can see the story of what is actually happening in that business. And I think that is just my own special gift. A little disclaimer for today. Attending this presentation does not create an accounting relationship between us. I'm going to present to you some financial information at a 10,000-foot view. It is meant for educational purposes only, does not constitute tax, legal, financial advice. It's always a great idea to take this information and back to your own accountant, attorney, or other professional to get advice that's tailored to your specific situation. Because I don't know your specific situation, but we're still going to talk about things that are definitely going to apply to your own practice today. So I'm going to start you with the story of my client Stacy. Stacy was a group practice owner, and we had been working together for a little bit of time. But she called me in distress one day because she could not make payroll. I'm an accountant, as I mentioned, so we're not exactly known for being warm and fuzzy, but I could definitely hear the distress in Stacy's voice. She was afraid for her team members, for her family, and for herself. Stacy had been working really, really hard, keeping her practice above ground. She had actually been seeing 35 clients per week, sometimes even more, with barely taking a day off here and there. But she had a personal family situation. She had had to take some time off. And a lot of things had fallen by the wayside because Stacy just had such a big part of everything in her practice. So intakes were down, billing was irregular. She was seeing a lot less clients, but also her community outreach efforts had basically fallen by the wayside. So her very well-intentioned team had tried to jump in and kind of do a patchwork of things to help out, but that meant that payroll was through the roof, intakes were lower than ever, and there just wasn't enough money for payroll. Stacy had been building her business steadily, hoping that someday, if she needed to step away, it would actually cover for her. But she basically at that point had nothing to show for it. So by the time she had reached out for help, she really felt like her practice itself was a house of cards about to collapse, and she was just scared, but also really, really frustrated that she had worked this hard and had almost nothing to show for it. In private practice, profit is not a dirty word. But the reality is, for a lot of practice owners, profit is something that happens on paper, often at tax time, like right now, when they do their taxes and they meet with their accountant, and they see like, oh, here's how much you made in profit, and the practice owner just wonders like, where actually is that money? But profit doesn't need to be, it shouldn't be just an annual event. It can be a habit, and there's a formula for that as well. And the truth is, your clients need your practice to be profitable, right? In the sense that they're not going to tell you that directly, but they need your business to survive next week, next month, next year, because your clients need your help. And even if you're in a group practice where you don't see clients anymore, your clinicians need you, right? And they need your practice to be profitable so that you can pay them, and they're not worried about whether they're going to get paid or not, but they need their job, right? And so the profit in your practice has this really large impact. And if you're out here in the real world with most of us need money in order to live, or need to make money, right? From the thing that is your talent. And so you do need to make some money. And really, if you have a team, no matter what you do to build the culture of your team, missing payroll is a really surefire way to make all of that evaporate within a question of moments. I want to share with you a few stats from the Small Business Administration. These are 2023 stats. We don't have 24 quite yet. But in the United States in 23, there were about 33 million small businesses. A small business is considered to be under 25 million in annual revenue or less. I'm guessing that probably is most of us in this room, 25 million or less. Of those businesses, 83% are surviving check to check. That means like one deposit doesn't come through from insurance, or something happens one week, right? Intakes all of a sudden fall, and the business is immediately at risk. It's in part why a little less than 50% of businesses won't survive the first 5 years, and only 9% of these small businesses will ever make it to $1 million a year in annual revenue. So really, of this 33 million, 91% are making under $1 million in annual revenue. And so these are many of the reasons why sometimes practice owners struggle to keep the doors open. And while you're probably not in private practice or thinking about private practice to get rich, I do think you deserve to feel secure in your business and know that your business is profitable, and be able to pay yourself as well. If you are like many of our clients at GreenOak Accounting, I think there's a chance that you might be an accidental business owner. When you were in grad school, you probably weren't thinking about starting a business, right? You were busy honing your clinical skills, as you should. And then whatever path somehow brought you to private practice, you embarked on this entrepreneurial journey with little to no knowledge about business, and maybe even managing your finances. And so I have no doubt that you're a great clinician, but that skill alone doesn't necessarily automatically make you a great business owner. And so when the business is surviving deposit to deposit, there's a lot of things that you just can't do sometimes, right? Like you might not be able to offer sliding scale spots, or give as much as you want, or work the hours that mean that you can do your best work. And so I personally believe that your practice deserves to be profitable. That's one of the main tenets of what we do in my accounting firm at GreenOak Accounting. And so I think that every single practice deserves to make money, because that means it will survive, right? Profit is the means to keeping the doors open, keeping on doing the work that you do, and ensuring that you are around, you and your practice, to help the people that you are meant to help. But I think sometimes when I say this phrase, right, like every practice deserves to be profitable, sometimes, if I'm speaking in front of a crowd, people will say, like, I will see some heads shaking vigorously, but there will also be those practice owners who almost like recoil in horror, like, oh, how dare you say that, right? How could I possibly deserve this? Or maybe you're feeling a little pang of anger towards me, because really the number one goal should be to help people. And really that is the goal, but without money, there's a chance that you can't really help anyone. And so I would even go so far as to say that it is your ethical responsibility to have a profitable practice because it allows you to increase your impact, allows you to do your best work. It allows you to keep growing if you want to grow your practice. It allows you to offer the sliding scale spots that you want or to help a specific population if you would like to take the insurance panels that you want. But when you are in survival mode, living on the edge of poverty, that means that you just get to help less people. And so I grew up in a household with a mom who was a serial entrepreneur. She loved, loved, loved the beginning stages of a small business. And anytime she would say, Julie, you've got to spend money to make money, I knew that my mom was about to spend money on something that she probably could not afford. One of my very favorite businesses of hers was a small fabric store. It was like a little Joanne fabric. And I just remember living endless adventures in that store with my little sister. So we would hide under the tables, we would walk through the aisles and touch every single bolt of fabric. We would look at all the patterns, the shapes. There was an entire wall of just buttons of every color imaginable, shape and size, all the threads, the scissors, right? All of the things. I hope you can picture yourself there with me. But as much as I loved that store, and as much as my mother loved that store, it eventually failed. One night there was a fire in the business downstairs, and unfortunately, the entire building went up in flames. And there was not enough money to rebuild, so that was really the end of that business. But the truth was, fire or not, the business was on its way to failing. It hadn't made a profit in months. There were no more loans to be found. The bank would not give my mother another loan or another credit card or anything else. There were no more family members left to tap on the shoulder. This was kind of the end of the line. Really, the fire just ended up accelerating that process. After that, for my mother, there were a lot of other businesses as well. She had a subscription website, there was a magazine, there was a phone book in a South American country. She loved the just starting a business and getting things off the ground. And unfortunately, that meant um, uh, 8 different schools between kindergarten and 12th grade. Change was the only constant here. I'm sad to say that all of the other businesses did also eventually fail. And so I grew up telling myself, I will never be a business owner. If my mom, who's very, very smart, very talented, cannot do it, I cannot do it. But one of the really big lessons that I learned from that time is that, being great at something doesn't automatically make you a successful business owner, right? Being good at your craft is not an automatic, and that there's no shame in that. That is not something that you should feel bad about, because these are skills that are that you can learn, that you're capable of learning. And I also know that as we've worked with now thousands of practices at GreenOak Accounting, I've seen my mom's story play out again and again with a lot of our practice owner clients. Some of them will come to us at a time of financial difficulty where maybe they're barely scraping by, and they're amazing clinicians and they've put all their blood, sweat, and tears, a lot of tears sometimes, into their business, but they sometimes often feel guilty about wanting more and wanting to be able to, pay themselves well and move and like maybe get a new car at some point, right? All of those things. And so being a great clinician doesn't automatically make you a successful business owner, but I want to show you some tools today that you can use to at least manage the financial side of your practice. And so I want to introduce to you Profit First. I found Profit First, actually, let me see. I found Profit First at a time when I knew I had to start my own business. That was just what was going to be necessary for my family. And I knew though that I had to find a way to do that in a way that was not going to put my own family at risk, that was going to add to the bottom line versus taking away from the bottom line, like I had seen happen with my own mother. And so that is the point where I found Profit First. And since then, we've implemented this system with many of our clients, probably a few hundred at this point. And I know this system works extremely well for therapists in private practice. And so I'm having a hard time here with the sharing. I might have to stop sharing and come back to it. Give me just one moment. All right. And so every practice can be profitable, and Profit First is the path to financial freedom for a lot of private practices. And so I want to show you the traditional accounting equation. This is what you would see if you're going to Accounting 101 in college. This is what you're going to learn on that first day, the traditional accounting equation that you also see on the profit and loss. And so this equation is income minus expenses equals profit. So income minus expenses equals profit. Profit in this case is a leftover. It's what's left at the end, if anything is left at all. I like to give the example of a tube of toothpaste here. I have three children, and if you give my children a brand new tube of toothpaste, they are going to go at it with reckless abandon, right? There's going to be toothpaste in the sink, on the counter, maybe sometimes on the floor, definitely on the front of their pajamas. But they're going to, use it with abandon. However, when that tube of toothpaste is almost empty, I see them policing each other and saying like, "Hey, don't use all of it. Be careful," right? They're kind of sliding it on the side of the counter, trying to get every last piece of it. So when there's a lot of toothpaste available, they're very very generous with their usage. Whereas when it gets a little bit more restricted, they tend to be very careful about it at that point. And so really what we do with Profit First is we turn the traditional accounting equation upside down, where income minus profit is going to equal our expenses. So we're building in profit from the very beginning. We're carving it out at the top so that there's less money available for expenses. And that means we're naturally going to do two things. We're going to get more creative, and we're naturally going to spend less money, right? That is what it ultimately will make it do. And so what I want to be clear with is Profit First will not ask you to put profit over people. That is not at all what I'm asking about. I'm just saying profit has a place at the table. It is an important consideration to make sure, again, that you can continue to serve your mission and serve people as much as you are able to or want to, right? So we're not saying we're going to put profit over people, but in order to survive in the real world, a business must make a profit. And so I'm going to go over with you some profit first principles today. And the first one is that we're going to we're going to use a small plate. So I grew up in the 90s where finishing your plate was a really good thing. It was praised in my family. I'm not saying that it's good, but that's just how it was, right? So there was talk of like the Great Depression or the starving orphans, and like I was encouraged to finish my plate. And so that means now as an adult, whether I'm eating from a large plate or a small plate, my natural tendency is to consume everything that is on that plate. And whether that's a good thing or not. So if I am not finishing everything that's on the plate, that's because there's a lot of mental energy being spent thinking about it, right? I'm making a lot of micro decisions. There's a lot of chatter going on. I'm thinking about, well, am I still hungry? Should I have another bite? What about this? Should I leave the bread? Like there's just a lot of chatter going on. And so if I'm eating from a smaller plate, I am naturally going to consume less. By default, right? And so how does this translate to your money exactly? This is not, we're not talking about nutrition today. We're talking about money. This translates to money in the sense that when all of your money is in one large bank account, your brain is saying, oh, this is all the money I have available to spend. Let's consume it all. So when we are eating from a smaller plate or when we are putting our money in multiple smaller bank accounts, then you are naturally going to spend less. So what does that look like in reality? It is going to look like multiple bank accounts, usually 5 or 6, where your money is going to be distributed. So we're going to go over each one of those in detail, but usually it's going to be 5 or 6, depending on if you're in solo practice or in group practice. And so let's just start with the income account. This is where all of the deposits are going to come in from your business. This is going to cover the insurance, all the income that come into your practice. Next up, we have the operating expense account. So actually, I'm going to go back here to the income account. In most cases, for an insurance practice, your existing checking account will become your income account because we don't want to mess around with where your insurance deposits are going. Okay, so for an insurance practice, your existing checking account becomes your income account. Next, we have the operating expenses account. This is where most of your kind of discretionary spending is going to happen. So in this account, we are usually spending all of the overhead operating type expenses like software, rent, advertising, office supplies, liability insurance, right? You kind of see where I'm going here, kind of all of the discretionary items that are necessary to run your business. If you are using a business credit card, that would get paid from this account as well. Next up, we have the payroll account. So again, this is going to be optional. It's for group practice owners only. If you are in solo practice, you won't need a payroll account. But if you have a group practice, which many of you do, I saw in the chat, one of the biggest, if not the single biggest expense in your practice is going to be payroll, right? You have your clinical payroll, your administrative team, leadership, if you have that. That is usually a very large chunk of all the dollars coming into the practice. And so by giving it its own account, we are controlling it much better. We have a much better idea of where all of that money is going. So out of this account is going to come wages, payroll taxes, benefits for your team, right? Everything payroll related, as well as if you have clinical contractors, that would come out of this bank account as well. So for all of your team members, that is where your wages would be paid from. It allows us to keep a really close eye on how much money is actually going directly to payroll. Next up, we have the owner's pay account. This is the account that is meant to pay you as the owner for all the hard work that you do in the business. Now, again, depending on the legal entity that you have, there's a chance that you might be on payroll as well, right? If you have a business that is an S corporation, you are required to be on payroll. So you're probably getting a paycheck. That would be through the payroll account, but you are likely also getting maybe a regular distribution from the business that's above and beyond the S corp. That would make sense if cash flow allows. And so that amount would come out of this owner's pay account, or if you have a single member LLC, or you're just a sole proprietor, you're not paying yourself through payroll. Please don't pay yourself through payroll, but you would be withdrawing funds from that owner's pay account. And so the goal of this account is to pay for to cover your everyday living expenses. That doesn't mean that you pay them out of this bank account, right? It just means that this is the account that you're going to use to pay yourself, right? Whatever vehicle that looks like, you're going to transfer money from here to your personal bank account where you will then spend it. But sometimes you're going to put more money than you need into this account, and sometimes it's going to be a little bit less. So that's going to create buffers so that you can have vacation money or pay time off money, right? That you technically don't get as the business owner. So in the owner's pay account, I want to reiterate this. Your regular draws or distributions to cover your day-to-day living expenses. So in an ideal situation, this is covering all of your day-to-day living expenses. Next up, we have, I want you to consider in that owner's pay account, your total compensation package as an owner, including time off that you're going to need, retirement contributions that you want to make, health insurance. It could be also other insurances like life insurance. I want you to think about what are all the things that you need to be okay, not just the minimum amount that you need to take home to like keep the lights on. That number this number might not be possible on day one of your practice, right? I know some of you mentioned you were starting a part-time practice, but I want you to consider what all of those needs are when you are building your own owner's compensation package. Next up, we have the tax account. This is the account where taxes will be held in order to pay your quarterly estimated taxes or the tax bill that is due, on April 15th when you file your tax return or with your extension. So depending on the legal entity of your business, your business likely does not pay tax, at least at the federal level, right? In the United States, most of our small businesses are what we call pass-through or flow-through tax entities. That would be an S corporation, a partnership, sole proprietorship, single member LLC. All of those are pass-through entities. Everything except for a C corp will be a pass-through entity where the business itself does not pay tax at the federal level. Rather, that profit flows through to the personal tax return where it is then taxed. And so the business itself does not pay tax at the federal level, but the business can save for taxes on your behalf, right? It can save for taxes and pay those on your behalf. So what that means is we're saving money in this account so that when it's time to make that tax payment, you are not scrambling around wondering like, where am I going to get that cash? Where is this money going to come from? You have money reserved for that exact intent and purpose right here. And then last but certainly not least, we have the profit account. This account is meant to be both savings and reward. So it has some double duty to do. The account is meant to be half savings. So you're going to let money grow in this account. And then at the end of the quarter, you're going to leave half of it in there as a savings. And then the other half is a reward to you. Equate this to owning a dividend paying stock. So if you own shares of, for example, AT&T, you will get at the end of each quarter a little check or a big check, depending on how much stock you own. With it could be like a few pennies or a couple $100s, right? Depending on your stock position there. But it is just a thank you, right? You didn't go to the AT&T store in your neighborhood and work the counter. You didn't go work their customer service. You didn't do any of those things. You are just a shareholder of the business and you're getting rewarded for being a shareholder of the business. That's how I want you to think of this profit account. It is meant to be a reward above and beyond your day-to-day living expenses for being a shareholder of the business. So that's how I want you to think about it. And I would love for you to create a ritual around that as well. So we have some practice owners who have, for example, they will go on like do a special dinner with their family or a friend when they celebrate their profit distribution. Some of them will go on a weekend away or a larger trip, right? It really just depends on how much money is available for that. I want to point out here that there's 3 of those fundamental bank accounts, 3 of the 6 bank accounts that are directly meant to benefit you as the owner. That's the owner's pay account, the tax account, and the profit account. So the owner's pay account is paying you for your day-to-day living expenses. Tax account is paying taxes on your behalf, and profit account is for your reward. And so there, you are an important part of the business, right? I equate this to putting on your oxygen mask when you are flying. I travel on a regular basis, usually work related. When the flight attendant is doing the presentation, right, they always say you have to put on your oxygen mask first before you help anyone else around you. And so in the business, you have to be okay if you're going to take care of everyone else around you in the business as well. And so this is you taking care of yourself. So I want to bring this back up again. I'm going to say this a few times. Helping professionals deserve to make a good living. You should be able to pay yourself and pay yourself well and live the kind of life that you want without judgment, right? Whatever you would like for that to look like, your business can sustain that if you create the kind of business that can do that. Our next profit first principle is that we are going to enforce a rhythm. So I've showed you the 6 fundamental bank accounts and what they do. So you're going to enforce a rhythm within your business, and that means on a regular basis, money is going to move from the income account to the other five bank accounts in order to sustain them. Cash is really the lifeblood of your business, and so we've got to move money on a regular basis. There are a couple of different options available to you. In almost every case, I recommend that folks start with a weekly transfer schedule because there's a whole lot that can be gleaned about your practice if you are just looking at the money once a week. So once a week, just peeking in, it takes just a couple of minutes and you're looking at what is happening. You're going to really quickly learn about what's going on in your business. There's also an option of doing a biweekly, so every other week. You can also look at it twice a month, so on the 10th and the 25th. Those dates are there because a lot of your bills are going to be due on the first of is going to be transferring money before those bills are due. And then monthly is the last option as well. I am personally a really, really big fan of aligning your transfer frequency to your payroll schedule. So again, this is not going to apply if if you have a solo practice, but if you have a team, I would align this to your payroll schedule. For example, I pay my team every other Friday. And that means I do transfers every other week, right? Always before we are running payroll, I am transferring money from the income account to those other accounts. That means there's always money available for payroll. I want to show you one of the benefits of weekly transfers. So if you're doing transfers on a weekly basis, maybe every single Friday, you are quickly going to learn what is normal in your bank account, right? So especially when it's not mixed in with everything else. So it's just income. It's not mixed in with your credit card payment and your rent payment and payroll and all the other things happening in your business. So you can see there's $8,400 on this Friday. Then another Friday, there's $9,100. Like maybe the normal for this practice is around $8,500, right? Something like that. So if you get to another Friday and you see all of a sudden, wait, there's only $6,500 in this bank account. What is happening? Right? The system is not necessarily answering that question for you or fixing it for you, but it is going to really quickly alert you like something is wrong over here, something is going on, and I need your attention, right? Your business is going. So this could be a lot of different things. It could be maybe one of your heavy hitter clinicians was on vacation last week. Maybe your biller was out or was out sick and didn't submit claims for a couple of days. And so this is the consequence of that, right? Maybe you were out last week. So there's a lot of things that could say like, okay, this is normal. We were expecting this. But if you were not expecting this, then you can immediately go into a fact-finding mission to determine like what is happening in the business. And it's just so much easier to identify that something is wrong when it's not mixed into everything else. The third principle I want to cover today is that profit first is going to remove temptation. And so I want to share with you an example of M&Ms. I like to tell this story. So Google is known to be a very generous employer. One of the perks that they have is free micro kitchens, right? So in most of their buildings, in most floors actually of each building, there is a micro kitchen where you can find food, snacks, drinks, all that, all free. You can just go and get whatever you would like, whenever you would like. And so early in the 2010s, the Google food team realized like, okay, something is happening. New Googlers who join the team are gaining on average 5 pounds. And so it's, like how can we support someone who's walking into the micro kitchen at 2 o'clock in the afternoon and wanting to make what they consider a healthy food choice for themselves? How can we support them in that choice instead of have them walk out with a handful of M&Ms that they actually had no intention on consuming? At that time, the M&Ms were the single most popular candy in their micro kitchens, and so they ran an experiment and they changed two things. They said at the time the M&Ms were in a clear bulk container, kind of like what you would see at a grocery store, right, where you can just kind of like just open up a handful right into straight into your hand if you would like to. And so they removed the bulk containers and they put the M&Ms in an opaque container, no longer clear, and behind other healthier snacks. So those are the changes, right? Opaque container, farther away, so like less in your face than that bulk container that's just looking at you when you walk into the kitchen. Because what they were very clear on, they did not want to make decisions, food decisions on behalf of their team members, right? If someone wants M&Ms, you should be able to get them and find them in the micro kitchen. They just wanted to support their team members in making better decisions if that's what they wanted to do. So that change alone in one single office, in their New York office, resulted in 2.1 million fewer M&M calories consumed in 7 weeks. 7 weeks. That's it. That's all. Seven weeks is all it took for that. So what they essentially did is they removed the temptation, right? They weren't just right there looking at you. And so it was really a lot easier to not consume M&Ms. And so related to that, I often get this question like, well, I know you've shown me the 6 bank accounts, but do I really need the bank accounts? And in order to remove temptation, I would say, yes, you do really need the Profit First bank accounts. They really, really are very helpful. And I want to show you an example, and I hope you will participate in the chat. I would guess that as a small business owner, you probably make, $1,500 uh, uh, decisions on a regular basis, right? Would you say so? Can someone tell me in the chat, like, have you made a $1,500 decision for your business at some point this year? So far, it's April, beginning of April. Yeah. I'm seeing a few, yeah, new computer. Yes, yes, yes. Okay. Um, I am curious who has checked their bank app this week. It's Friday. Has anyone checked their bank app this week for your business? Let me know in the chat. Yeah, yes, in the chat. Okay. So if you're making a $1,500 decision, and this is your bank account, right? There's $11,478. And you're deciding, let's just use Christopher's example, buying a new computer. What would you do? Would you buy it? I probably would. Yeah. Let me know in the chat. What would you do? Yes. Yeah. Don't be afraid. Like there's no right or wrong answer, right? I'm not getting anyone in trouble. I'm not going to call you out. Okay. I would guess a lot of you would probably say, yeah, I mean, $1,500 decision. There's 11,000 there. That's probably fine. What if this is what your bank account looked like, right? You're pulling up your bank app and this is $1,500. It's a computer. It's going to come out of your operating expenses account. There's $1,600 in that account. There's $3,000 in the payroll account, $2,700 in the income account waiting to be distributed to the other bank accounts, $1,200 in the tax account, sorry, in 1,200 in profit, 1,300 in tax, 1,100 in owner's pay. Yeah. So to me, if I'm thinking about a $1,500 expense and it has to come out of this $1,600, my answer is not a no, but it's a big maybe, right? I'm like, okay, I have to just look at the context. And you personally have context of your business, right? Christopher's saying the computer's going to have to wait. Yeah, maybe. You might know, well, I'm about to transfer money from income to the other accounts today, so there will be more soon. You might know, the rent check just cleared because it's the beginning of the month, or the rent check hasn't cleared yet, right? That's important context here. But at a glance, if you're comparing between the two, right, between this situation and that situation, it's the same dollar amount. But just that one glance gives you exponentially more information about what is going on financially in your practice at that one glance. And ultimately, that's one of the things that I love about Profit First is it's not asking you to change your habits, it's asking you to leverage them, right? You are a human. Humans will look at their bank and do bank balance bookkeeping. That's just a normal thing that a lot of us are going to do, including me, right? As an accountant, I often will just look at the bank balance for to make a decision. And it's going to give you just a lot more information right at a glance. There are also multiple optional bank accounts that you can decide to add on. I would encourage you to start with the 6 foundational accounts and then add on if you would like to. But you can add an account for expansion, for example, for an emergency fund, for a future employee that you plan to hire. paid time off or continuing ed reimbursement to your team, right? There's a lot of different things that you can add a bank account for if it is helpful to you, right? That is really the important piece. If it is important to you, you can add a bank account if it is going to be helpful for you to manage your team. We have multiple clients who have a sick time account, for example, when they have a mandatory sick time requirement in their state, and they want to make sure that they always have that money available when their team members want to use that, because you have kind of a double whammy going on there, right? You might have a team member who's not seeing clients that week and you have to pay them out. So knowing that you have that money just saved aside can be really, really helpful, right? So you can use it for whatever is helpful ultimately to you and whatever will help you manage your business better. So when it comes to your practice, there's a chance that you might be in one spot and might want to go to another spot. That's perfect. It is completely normal and okay to not be where your final destination is, right? Business is a living, breathing thing, and it's always ever changing. And so I want you to introduce you to the instant assessment. It is something that I spent a lot of time talking about in my book. We won't be able to cover it in full detail today. We don't have quite enough time for that. But I'm going to share with you at the end here a QR code that you can use to download the instant assessment as a free tool. And so in the instant assessment, you're going to learn about two things. One is your current allocation percentages, so how much you're spending on various categories of expenses in your practice. And then you'll also determine some target allocation percentages. So again, your current allocation percentages may not be where your target is, right? You might realize in doing the instant assessment that like actually you want to spend more on something and less on something else, and that's completely okay, and it's a gradual process that you will do over time. And so I'm going to show you some of our target allocation percentages. Again, you'll have this in the instant assessment if you download it. It is also in the book as well. But I just want to be super clear that your target allocation percentages are not necessarily where your practice stands today, right? So we have determined these target allocations based on years and years of working specifically with private practices and seeing what is doable consistently across the board. So these percentages are not just available to the top 5% most efficient practices. These are things that we are seeing consistently doable across the board, across geographic locations, consistently, right? And so it's not the bottom 5 or top 5%. It's really, this is consistently achievable across the board. So see on the left-hand side, the bank accounts that we have talked about already, right? You'll see the bank accounts here, operating expenses. For payroll, I'm giving you 3 different allocations. So clinician, admin, leadership, just because I like for you to see those separately, but they all roll into one specific bank account. Then we have owner's pay, tax, and profit. And then along the top here, you'll see various sizes of private practices. And let me just go over that in a little bit more detail. A solo practice is pretty self-explanatory, single owner clinician. There may be an admin, right? So, or a virtual assistant, biller, something like that. But there's a single clinician owner doing all of the clinical work. So we have here your allocations for a solo practice. You'll notice there are ranges for each and every one, and that's because not all practices are exactly the same. Not all of them are going to have the same values or same desires. And as you move through, especially that solo practice, right, there's a big difference between maybe a startup solo practice seeing 5 clients a week and then a solo practice who's met kind of their maximum. Maybe they're seeing 18 or 20 clients a week. They're what they consider to be full. They're hyper efficient, right? There's going to be a big difference there. So as you move throughout that phase of growth, you're going to see kind of a different allocation there. And then you'll also notice all the tax allocations. There is a wide range because not everyone's tax situation is going to be different, right? That depends a lot on what's going on in your household. Are you in a 1-income household, a 2-income household, high-income household, right? Those things actually really do matter here. I want to move on to that small group practice. This is typically where there's one owner, 1 or 2 full-time equivalents. So it might be a couple of part-timers. Typically, revenue-wise, that's going to be somewhere between 150,000 to 400,000 in annual revenue. So as you move through that small group practice, right, things are changing pretty quickly where your clinician payroll It's going up, 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 up as you move throughout that phase. But one of the big markers here is the owner is still seeing roughly 50% of the clients in this stage of private practice. This is, in my opinion, one of the toughest stages of private practice, just because there's not usually quite enough money for the owner to reduce their caseload or hire significant administrative help. And so the owner's just wearing a lot of hats at that point. Then we have a medium group practice that starts around 350,000 in annual revenue, goes all the way to about $1 million in annual revenue as well. You'll notice also between these sizes of practice, there's some overlap in the revenue there as well, just because, again, there's going to be differences between private pay practices, insurance practices, right? It's not just a switch that you flip, that one day you're here, the next day you're there. There's some, you know, transition between that. And so in that medium group practice, there's going to be one practice owner, 4 to 8 clinicians, plus or minus, right? Somewhere in that ballpark. Way more sessions are being done by people who are not the owner, right? And that's what this scale is meant to represent, where there's still one practice owner, but the number of sessions that they're seeing is really just a really small slice of what's going on in the practice altogether. And so you'll notice here as we go towards that medium group practice, like these items for the owners, right? Owners pay tax, profit. They're just much smaller numbers at this point. And that's in part because like more and more work is being done by people who are not the owner. Then we move to that large group practice. One of the big items that we see at this point is the addition of a leadership level. So when you have 10 or more clinicians, it becomes pretty challenging for a single owner to be doing to be uh, leading the entire team. That does tend to become more challenging because you're now managing multiple, 10 plus clinicians, administrative team. There's just a lot more pieces going on. And so typically we see the addition of leadership that might look like a site supervisor, clinical director, right? Someone who's still seeing clients, but also helping with that administrative burden and leadership burden as well. And so one of the things I want to point out is as you go through and select your target allocation percentages, if you go high in one area, you usually are going to have to offset that by going low in a different area. Because when you add all of those items up, the entire column, your totals have to equal 100%, right? Because that's how math works. We cannot spend more than 100% of the money that you're making in the practice. And so we have to find a way to get that to 100%. So that might mean you're kind of negotiating with yourself, adding 1% here, taking a percentage away there. So as I mentioned before, like your total allocations have to equal 100%. You want to make sure that that is accurate. Money has to come from somewhere. I do want to come to those 3 specific bank accounts that directly benefit you as the owner and just kind of show you where I'm expecting those numbers to be based on the size of the practice, right? So for a solo practice, I'm expecting the 3 bank accounts that benefit you, the owner, to be somewhere between 50 and 80% of the revenue generated by the practice, right? Again, if you're in a high tax household, your tax might be higher and your owner's pay might be a little bit lower, right? But we're kind of working those numbers. But if you're in a large group practice, 10 plus clinicians, I'm expecting that these 3 accounts will total about 20 to 25% of the income that the practice generates. And that might feel like a small amount, right? But I want to point it out with this pie that you are really getting a smaller piece of a much larger pie, right? So for example, if we just scroll back here, if you're taking home as your owners pay 50% of 120,000 as a solo clinician, that's about $60,000. Whereas if you're taking home 25% of $1 million practice, right? That's much bigger number. It's a smaller slice of a much larger pie. I want to go into questions really quickly. I want to encourage you though first, when you are working on making changes with with the incident assessment, I do want you to think about starting with 1%. That's going to be just a really important piece of, um, uh, of doing so successfully. Small incremental changes are ultimately going to have a much larger impact on the long-term effectiveness of the system if you are able to stick with it. I just think if you are trying to kind of blow everything up and change everything by 10% overnight, it's just unlikely that it will ultimately be successful and that you will be able long term to do that. And so I want to make sure that you are thinking about starting slow and then increasing things over time. Ultimately, Profit First is not a magic wand, but it will really help you identify where there's areas of opportunity and make small incremental changes in your business that will ultimately benefit the long-term health of your practice. I want to, I have on my screen a QR code. This is going to bring you to the all the tools that are available in the book. You can get those for free on our website. There is no cost for that. Obviously, you're probably going to get most out of those if you also do pick up the book. That will be probably to your benefit, but I just want you to have access to the tools as they are. And so Abby is going to put that in the chat as well. Abby, can you confirm, are you able to see the QR code that I have on the screen?
Yes, I can see
Okay,
that.
perfect. All right, so I want to go, we have some questions in the Q&A. Do you want to bring those up, Abby?
Yeah, so we have a few just about bank accounts. So
Okay.
if we start with that, so Mark was asking for a solo practitioner who's part-time, do you still suggest the same number of bank accounts? And what about the cost of maintaining that many accounts?
So yes is the short answer. I still do recommend using all of the accounts. I would recommend that you choose your bank carefully in that case, right? Because some banks will have a minimum balance requirement in order for each account. And so there are several though banks, and maybe Abby, you can share in the chat. We have a link. I think it's profitfirstfortherapists.com/banks that has some profit first friendly banks. Relay is one of those where you can, you basically have envelopes. So it's going to look just a little bit differently, but there are no additional fees for all of those accounts. So while your practice is still small, maybe that's a good time to shift banks.
Okay, and Bank of America was suggested because of separate accounts. I don't know if you have any thoughts on that. And then a question about transferring money into a high yield savings account for single LLC.
Okay. Yeah, so Bank of America might like it is very popular. I do believe they charge a minimum fee, or a fee unless you have a minimum number of dollars in that account. So I don't believe that's one of the very profit first friendly banks. It absolutely is doable with Bank of America. Yeah. As far as the high yield savings, what was the question of just using high yield
Yeah, what are
savings?
your thoughts on transferring money into a high yield savings account for those of us that are single LLC or sole
Yeah,
proprietors?
I think that can be a great idea. Your profit and tax accounts can both be savings accounts. So the other accounts do need to be checking accounts because of the volume of transactions you're going to have in them. I don't recommend anything else be a high yield savings. And so I would, for those two, you can use that. Make sure it is it should be related to the business, right? So if you have an LLC, those should be business bank accounts. If you're using a high yield savings, that's a personal account, that's just a distribution of the business. That would be kind of be separate from Profit First.
Great. The next two questions are about LLCs versus S Corps.
Okay.
So we have a question. I'm wondering if you have any thoughts around sole proprietor versus LLC versus S Corp. I'm
Yeah.
currently a sole proprietor and enjoy the flexibility. My new accountant talked multiple times about switching to an S Corp. And I read online about other therapists who regretted switching over and how the S Corp status does not necessarily save that much money. So what, thoughts do you have on that and any resources to help make a
Yeah.
decision?
Okay, my opinion is an LLC is always a good idea if your state allows an LLC or PLLC. That's going to give you maximum flexibility. From a tax standpoint, an LLC and a sole proprietorship are taxed exactly the same, right? They're both going to be on a Schedule C. So it does not make your taxes more complicated, but doing or establishing an LLC early on when the business is still, small and simple is much easier than trying to do that later on, right? So the reason I suggest the LLC is one, risk management, right? I'm not an attorney, I'm an accountant. But from a risk management, you have that container for your business, but later on, then you have the option of making your LLC be taxed as an S corporation, right? So LLC taxed as an S corporation. So you don't have to change your bank accounts or anything else. Your EIN, everything stays the same, just the way your tax changes. And that's much, much, much simpler than having to get later on a new EIN, update your NPI, update your insurance panels, right? Like all those things just is very complex and it takes several months. So LLC for flexibility. I'm a proponent of evaluating if it's in profit for the business. Profit, not income, right? Those are two different things. So dollars coming into the practice after expenses, I want to see that number be at least 100,000 before you consider an S corp with the current tax law, right? If we have a lot of tax law that is planned to go away at the end of 2025. TBD what the administration will do between now and then, right? I expect that there probably will be an extension of it, but with the current tax law, $100,000 is where that number lies for me.
Okay, and then we have a question. What ethical issues do you see practitioners encountering in making financial decisions in their business? So in addition to it's ethical to make a profit, what other ethical, issues do you see them facing?
Yeah, I often see them make decisions without regards to the financial side. So, yes, making decisions that are perhaps right in this moment. But I think as a business owner, one of your big responsibilities is ensuring the survival of the practice, right? And that is a really important responsibility that you have. Definitely for all of your clients, but especially if you have team members, right? Making a decision that benefits one team member at the detriment of the entire practice is not necessarily what is best for the practice in the long run. And so it's a tough line to toe, but the viability of the practice is ultimately more important than like making any one specific person happy in the business.
Okay, I think those are all the questions I saw in the chat.
Let's see. Okay, perfect. I think we have 1 minute left. All right. Well, thank you so much, everyone, for joining us today. We had a lot of great questions. Very glad to see you all. Thank you for hosting us today, and I hope you have a great day.
Thanks for being here.
Thanks, Joshua.